There we go. Needs to make the noise. All right, good morning, everyone. It is 7:15. So, what do we have going? Oh, first thing from follow up from Thursday afternoon, right? And I was just mentioning this to Steve. I was going over with Steve. I've got two trades on. I picked up Sophie Friday afternoon, and I've got the TQQQ calls as well, because remember, I'm not sure I'll cover this. We'll just talk about it. I'll tell you, TQQQ at a 5.9 million print, and so that's the pro shares. It's the ultra bullish QQQ. It pays a dividend, so it doesn't really decay, but it can move. So let's actually look at what we have pre-market. So I made a YouTube video, which I do every day, and we were looking at Intel and TQQQ. So, and Tio insists that he has this, so we do that for him, is a screenshot of the actual callouts from the video. So we'll look at Intel and we'll look at TQQQ. So Intel's been on a tear. And as far as the swing trading, it's debatable. I mean, you can probably make more money swing trading if you're going to stay in it longer, right? But Intel has been on a tear. And when we were looking at this and we were talking about the swing trading, this is a rounded bottom that's happening. You can see that. Now, where the trend, because this was down for a while, right? So when we break this is our short-term trend, which was up, right? We can, as long as we can connect at least two things together, two candles together, three is better, three or more is better. But when we broke this structure here, so we've got this, we couldn't make a higher high, and then we broke it, then that's short-term bearish, right? Because overall, well, this is really, when it fell off the cliff here, we're still in this range, but we're seeing if we can ultimately make a higher high on this, right? So short-term, it's this is bearish, and then we're hoping that this actually switches and becomes bullish, but we have to get above this level here, 2639, 2650. And then we've got this massive gap all the way up to this print, up to 30. So I think Intel back then had 2 or 3 really bad news events at the same time. So if we were swing trading, like we were discussing this sort of thing, we get a massive print in. There was a 6.5 million here, 2273 from November 1st, right down here. And this pulled back, but look what we did is we went sideways forever. So 1, 2, 3, 4, 5, 6, 7, 8 days. And in the midst of that, we got another print, 21. There's a 28.4 million on December 5th. Now, this 28 million at $21, where's this? That's this one, 28 million. Now, you might hear the saying that the larger the print, the larger the splash, right? And that doesn't make sense to a lot of people. But if you take a small rock and you drop it in a pond, it makes a small splash. You ever seen Greenland, the movie, and you see a planet-killing meteor hit the Earth? That's a bigger splash. And so you get 28 million here. That's not something where usually it's not where it's just going to move right away. It does these sorts of things. And this is where having the prints on your chart, you can actually see how the stock behaves, how the institutions are buying and selling it, right? So we know that Intel's different than Bank of America, is different than Tesla, and all these sorts of things. So we can see here 28 million. And so how long did it take to actually decide to make a move? Well, this was December 5th. And where are good entry points? Now, when we're talking about this, when we map out trades pre-market, we do a couple things. We're looking for stock. We might be in the position, maybe not, but we actually just go look and say, hey, where's the pre-market volume, right? And so we're looking for hopefully stocks over 100,000 shares pre-market. That gets rid of all of the fluff. Now, if you were watching Intel, right? And so say we got this 21 million here. And well, what you can do is like, I'm going to trade Intel until it moves, right? So you could watch it and look for entries because, and the benefit of doing something like that too is if you want to trade Intel, then if you trade it every day until it moves and then follow it into the move, you get to learn how the stock actually behaves, right? So we would do a little bit of print investigation to say, hey, well, look at here, 19, we just draw a line at 19, right? Because that's the dollar level and it seems to be holding. So when we get these sorts of patterns, right, we know this is ranging, it's going to be a while. But when you see this, these are my perfect setups. This is what I look for, and I really don't care about many other things. And if it's on a 5-minute chart, this is pretty good. If it's on a daily chart, if it's on a weekly chart, because we've had that discussion before about how, this sort of behavior, these sorts of chart patterns exist on other time frames as well. And it's just, this is just a smaller segment of a larger time frame, which looks very similar when you blow up and so you call it a broccoli sort of thing. But we come down here, we've got this, so we have a few days and then we move down. It's like, okay, well, that's not much. We have to keep in mind that usually it goes in the opposite direction first. But then we expect it's going to test the print a few times. Really, this could really tank. This could continue down. But what we have here is we have massive volume, right? Usually seller's exhaustion, but this massive print, and then so this one comes in at 21. So that's the day of the print. 1 test, 2 test, that didn't test it. But then we came up and then we tested it again here, but that was in the midst of another print, another 5 million at 2054. So right out of the gate, you know there's going to be a massive move, and it is worth watching Intel. So whether Stephanie calls it out every day, it doesn't matter. You can put it on your list. And we know when we're below here, we need to watch for a break above, a close above 21, for example. We need it to close strong above this. But if we're watching it, during the day and we're looking for swings, then when this comes up, when we see this and comes down to the dollar level, and you see this bullish engulfing, increasing volume. So you can see this. There's some volume on the print, increasing volume, a little bit of a pullback, but this is called a 3-line strike, right? You've got something coming down to a level, a major level, increasing volume, but it gets rejected hard. So the rule with a 3-line strike is either the existing candle or the one previous would have the higher volume. So this still counts and these ones I find are absolutely phenomenal. This one engulfed, it was perfect. It was still below the 4 and the 8, but the thing is this is a straight up reversal signal. The other thing that I look for too is if like you're in the fib room, right? And Taz would teach the fib things or the Elliott wave sort of stuff. But when you look at it, another thing that I use to discern these sorts of things is we have these natural waves, right? So if we counted a 1, 2, 3, 4, 5, maybe, this usually they're in 3s or 5s. It's rare where you have just a V-shaped recovery. We did have a V-shaped recovery after COVID, right? Because everything bottomed down at like 220 something on the SPY, and then boom, it took off and doubled very quickly. So I'm just looking, if we just have like a 1 and a 2 and it starts going down, it's like, well, it's probably going to go down more. But what I'm actually thinking about too, when I'm looking at these things and deciding whether or not to get in, is where is it in its little routine that it's doing, right? Intel can be a little bit messy because you have some chop. But if I'm looking at this and this looks like the end of a 5, or the end of a 3, because this could have been just a 1, 2, 3 all the way down. I mean, the candles don't really say that, but you could have a 3 or a 5, right? And so it's like, okay, well, if this is a 5, that could be a really good confluence, because I don't like getting stuck in it where it's like, oh, it's the beginning of a 3 and I'm going long, right? If you look at it, it's like, I'm not sure. But here, perfect. This is my favorite trade setup. But where's our target, right? We're at 1950. Well, 20 is a major level, but there's a 5 million print, right? So if you were on the day trade, you were here on the day trade, and you're going to swing this, well, what are your levels, right? So right now, the ATR is $1.06 a day. So if we're looking at this, 1950, well, you might get to 20, or you might get back up to the print, right? And so this is pretty good. And what we're doing is we're trading this either day to day or watching it day to day. There might not be a trade setup for it, but we can set an alert for a close above this 21, right? That's if it's gonna go long, and we'd have to close here below this 19 or 1875, right? We got to get below this mess that's actually here. So when you see this and it gaps up and closes above the print, that's pretty bullish. What it did one other time is it shot up here. There's probably another, what was the high on this one? The high here was 2241. So close to the 2250, pretty much the end of this candle here, right? And if you look left, actually, if you look left, look at all of that support, all of these candles. It came up to there. 2250 is a major level, but then it retraced quite hard, right? So we just have to be wary of those sorts of things. Closing above here, you have the risk of it retracing back to the 4 and the 8. The one thing, though, is it went from here, from $19, and it jumped 32 million in prints right after this massive consolidation. So it actually pulled back all the way to the 19 level again, and then it took off. So anybody that was long here probably got shaken out. And then when it broke back under here, they would have been stopped out. And then it comes all the way back down to this liquidity zone at the bottom. Institutions, if we draw a box around this thing, institutions buy in the lower third and they sell in the upper third, right? Institutions aren't allowed to buy and sell in the middle. This is all the chop zone. They're buying at the bottom, selling at the top. And then our human nature, we're fearful up here, or we're fearful when it's going against us, and we're hopeful when it's we're hopeful when it's going against us, and we're fearful when it's going our way, because we might lose profit, and we've got to change our mindset on that. So this was a good trade. Now, whether you decided to go in really hard at this point, that's totally up to you. But as traders, we just have to be careful with our stops and all of that, and make sure we know what's going. As we get further extended, then we know that the 4 and the 8 is a rubber band. So we actually came back, and this was interesting, closing below this print. But this was massive volume, shot up, and then this kind of went against us. So the other thing to handle this, if at this point you thought, okay, I'm going along, it's like, okay, well, as far as your trading plan is concerned, how are we trading this? Are we buying stock? Are we buying options? What's our time frame? Am I doing an overnight swing? Am I doing a long-term swing? Those are questions that help us determine how we're going to manage this trade. This for an overnight swing, maybe, possibly. Our risk is back to the print below 21. Could possibly do that, or you wait for confirmation, right? But at what point is it confirmed? right? We've got this. But anyway, we come all the way back down, and then here's another opportunity to get in, right? None of these met these criteria. And then look at the waves, right? 1, 2, 3, 4, 5. These are really tight. This could actually be you could count it as I guess it's a 3 or a 5. But anyway, it looks like it's the end of a run because these happen naturally. Because if this comes down, people are taking profit. And then it goes down, it goes up because people are covering. They have to, if you're short, you have to buy the stock to cover, which makes it, you're buying the stock, so you're pushing the price up. And then it comes back down, but then we find support here. So when we're looking, what I usually do, if I'm going to swing something, we've got to draw some support and resistance lines, at least horizontal ones. And we have to look left to see what's actually happened previous. Now there was the 1, 2, 3, 4th test there, and then, but volume is key, right? Increasing volume here. This had a big wick on the top, so it met some of the criteria. So the criteria we're looking for: increasing volume, closing above at least the 8 EMA, but we really don't want a wick on the top. If it's super strong, then it should close near the high of the day. So if we're rating this trade out of 5, you can have criteria that sets up like a 5-star trade, right? And so this one, you could try it on this day. And if you were willing to try it there, say, for example, we thought, well, this is maybe a 4-star trade or a 3-star trade. We really want to focus on the 5s, but say we were going to take this, it's like, well, let's not go in full position, right? Let's do something else, maybe a quarter position. If you're used to trading, say, 5 contracts, if you're doing options, do 2, do 3. And see if it works. And then if we close below 18 something, then maybe you're out. Maybe if you're going to risk, say, $100 on contracts and you're willing to lose it because this has been going sideways for so long, then maybe you just let them go to 0. Maybe, because that would be part of your actual trading plan. But from the time it actually got a massive print here, December 5th, all the way to the time where it really started taking off was February 11th. So 2 months it took to consolidate here. So looking back, the good thing about having prints and being able to look back historically is you can tell it's like Intel takes a while to move. You have to be patient with it. It'll do something. Like if we look back, like look at all of these consolidation areas, right? From this to make a new high is September to November. There's 2 months to make a new high, right? And so if we're doing this from here, that's December to January. So that was about 5-6 weeks to make a new high. And then it pulled back and it did it again. So, and these are just the biggest prints in the last year. We can add more to it. This was 2357 there. And so, anyway, when we worked together on Thursday, was it Thursday we talked? Oh, yeah. When we worked together on Thursday, this is a really good part of the conversation. We were looking for swings and we looked at Intel. And we were like, if we were swinging this Thursday into Friday for an overnight swing, we talked about this and we're like, okay, there's great volume, but what we did was our risk was the close back to the 4 EMA, right? And then, so our risk, we closed at 24.13, so $24, and our 4 EMA was at 22.60. So we were, our 4 EMA was at 20, no, what was this one down here? 22.75. So we were risking $1.50 potentially to make what, right? Because when we looked left, where's our resistance? Well, this came up and tagged a double top. We're like, not too sure about that. But then we didn't take it. And look exactly what it did the next day. Came back, not only tagged the 4 EMA, it tagged these prints. 12 million, 6.5 million, 6.5 million, right? So this was down here, 2294, 2273, around here. Oh yeah, 566. So that's 13, 18 million here. But now we're above all of those. And this seems to be a little parabolic at the moment, right? So I called out Intel today. I guess long story, much longer. And so for Intel, if we look at it now, we're at 2490. We're very close to my entry point. Let me do this. I'm going to switch this to a 5-minute. So where we're sitting today, and I'll go through the reasoning for those of you that haven't watched the video. So we're looking at Intel. I put bullish above 25. And when I called this out, I think it was 5:30, something like that. It was around 5:30. It was very close to 5:30. And I said, okay, we're bullish above 25. Oh yeah, because in the video I'm like, oh no, it's just breaking above. So anyway, it was about here. But we have this at 24.88. So it's 24 and 7/8. The last eighth is the most expensive eighth in the world, right? And you can see that test, 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 breakthrough. There's 4 tests to break above. And so we're bullish above 25. And then our first target was 25.20. It's a lower price stock, and there's the 20-cent level. So this already hit our first target pre-market. And then, people write me and they say, well, I had an interesting question because somebody said, a bunch of times your stocks hit their targets pre-market. It's like, how do I know which ones are going to run at the open? And it's like, well, when you figure that out, let me know and I'll just cash my retirement checks. Right? That's pretty, if we're trading pre-market, that's great. If we're not, then we've got to wait for another entry, right? Because it's kind of a guide what we're doing so that you can see if we can rationalize this sort of thing. So this is an R1. It's a person's R1 at 24.91. So we've got to get above the major dollar level. And 25 is a massive, massive dollar level. It's 5 ones. It's $2.50. It's 4 $1.25. It's a whole bunch of smaller ones together. So and why that's important, not only is 25 a psychological level, the smaller increments are buyers and sellers with algos, like in the last eighth, and on these pivots and cams, right? So we're bullish above 25.20, and then we did 25.50 because that's a $2.50 level and it's a 50-cent level. And then we look at 26, 26.20. So this also is a dollar level and it's a cam. It's a calculated resistance. And so this is big. Our ATR is $1. And so if we're sitting here around 25, the historical move in the last 14 days has been $1. So 26 might be the end of the road historically, right? So we're going to look to get profit closer to 26, although we have this massive $1 pocket, which is phenomenal. Then we've just mapped out 26.20. And then if this continues, there's no room. It's just, there's all kinds of room, all the way to 28.50. So there might be prints, there might be some other things, but we haven't looked. Now we're bearish below 24.50. I put that down here so we can fill this gap. And so we could go 24.86. We could adjust that and get below this. We'd get below that last eighth and put our stop above the 25 level. We could give ourselves some room there and see. But we got to wait for these candles to close, right? See, because right here, and I just thought of this because I burnt myself so many times. I looked at this. Okay, so this one came down and wicked. This one came down, and look, if this one came down and closed at 24.86, it's like, oh, maybe I'm going short. This is bearish, right? This is exactly my 3-line strike, but in reverse. At the top, increasing volume, and then coming down. This still might come down, right? This was a bit of a, this was a trend change a little bit. If we look at this, you had this, and then this kind of went sideways from here. If we look at this, if we were to draw a box here, right? And then what happens, this hit 25, it upthrusted, closed above. People probably wound up going long at 25.20, the close of the candle, and that would be right. You know, if and this would be a good position to add to your position. It was the close above here, and then you have this candle here. So people now, they probably have their stop below the box. And so we're going to have it, it'll probably come, take these out, and then maybe move back up again. But this is a perfect 3-line strike to the downside. And so this could be a 1, a 2, and then the 3 could come all the way down to here, maybe 24.66. I got a text from Steve. Let's see if maybe there's something going on. Oh, Steve is stepping out. Okay. All right, Steve, hopefully you're back for our afternoon session. Safe trip. And so we'll watch this now, right? Because we've got our bearish below 24.50. We could do 86. I picked 50 down here. That's more, we could change it, but that's a personal preference. 24.50, and then that gives us to fill this gap, 24.50 down to 24.22, which is a 5.7 million print. There's a cam at 24 and a 7 million print at 24.16. So I would be taking some profit here for sure. And then we've got 24 and these ones. Now, we do have to map it out both sides because anything can happen. It's just like having a plan. You know, you don't expect to crash your car, but you've taken that defensive driving class anyway, right? And we don't want to bias. If we get into our heads that we're biased, it's like, oh, Intel's going to the moon, and we don't consider the downside, then we can really hinder ourselves, especially when you get into that mind trap of, you know, what the market's going to do. We don't know what the market's going to do, right? Because there's an unknown number of people participating in the market. There's an unknown number of people that are waiting for something to happen. We don't know who's in the trade, about to get in the trade, who's about to get out of the trade. So even if we had this exact setup again, you could never have the same instance twice. You could never have the exact same scenario, and we can't measure it. So we just have to be ready. If it does this, we will do this, and these will be our targets, right? So if we bought in here, because usually when this is running, this would have been a great opportunity for me to add to my position. So we get something like this. Here we made a higher high. You expect a bit of a pullback. And then you've got a higher high. I'd be a little concerned. I wouldn't get in at 25. Right? I'm not buying at 25. I'll buy on a close above this cam, right? Something like that. And I would also consider, like, this increasing volume. It's like, okay, we're close to the dollar, maybe, but I'm not buying at the first test of 25. This is a perfect fake out because look, increasing volume, close above, you could add to your position there, right? And then boom, it goes against you. So this, you would have to have your stop loss there. And so anyway, that's just, that happens, right? So now we've got to, we'll keep this. Now we've got to break above this, 25.20. If we have increasing volume here, if we see something like this, a 3-line strike forming and breaking above, then we might have, it might be good. But the thing is we have to, for this trend to stay strong, we have to make another higher high, right? This one made a high, this one made a higher high, but then it failed, right? Because if we're looking at this, the short-term trend has failed. So we actually have to, I'd be watching this closer. Well, it's only 20 to 8, right? So the market doesn't open for another hour and 40 minutes. So that's our setup for Intel now, and we've had a discussion over that. So the other one, TQQQ. Oh yeah, and we were going to talk about Apple as well. We'll just do it this way, TQQQ. I'll switch this one to the daily. So this one here, we discussed last week, 5.6 million at 87.99, so essentially $88. It went sideways on the third day, increasing volume, closing below the print. And it usually splashes in the opposite direction. We know previously that we have all of these prints here. 5 million, 2 million, 1.4 million, 700,000. We know all of that. This gaps down, hammers and closes above these prints, right? So you're like, wow, that's interesting. What do you do with that? Well, it's up to you on that one if you want to. No, the Qs look very similar to this. The difference is the Qs is a $500 stock, and this one is 91. And I've traded this one recently. Actually, the options haven't been too bad. I got a 94.95 call spread for February 28th. I'm looking at my thing. I paid 35 cents with my commission. So we're up $1 today. I'd have to look and see what the delta and the gamma is. So yeah. So within the next February 28th, within the next 10 days, this has to move $3, right? For it to hit my initial strike. So my maximum profit on this, so if I paid 35 cents with my commission, my maximum profit is 65 cents, right? It's the difference between your spread. So it's your spread price, what you minus what you paid for it is your maximum profit on a spread. Doesn't matter if it's a call spread or a put spread. So what I can do is I'm risking 35 cents to make 65 cents. So I'm looking to potentially double my money at that. I could scale out. So if it gets to like 92, something like that, I can probably take half my profit. But we'll have to look when the market opens. You can tell what your delta and stuff is on the spread. You can tell by looking at it what it is, and maybe we could look at that this afternoon and see how well it goes. But we can talk about some options and figuring out what they're actually worth just by eyeballing them, right? You can actually pull up the P&L graph. You can do all of that. I just like to eyeball it because you can tell by looking at your strikes to see what the what the delta is and the gamma on it. Even with its even if it's a spread, you can tell just by looking at it. If it moves $1, what's my option price going to be, right? So this has already moved 25% of the value towards my strike. So I don't know. Maybe these will be up 10-15% today. I don't have a lot of them, but anyway. So this is interesting because we have this massive these massive trades on the QQ on the TQQQs. And then if we look at the Qs, then that's the same as well. And the one thing too is if the QQQ is going to go up, the stocks in the QQQ are going to go up. So we could go here. Let's just have ETFs. And if we put in QQQ, go there. Here's the top stocks. Apple. And remember, Apple, we got to look at our Apple trade because we found that on Thursday together. So Apple is 9% of the NASDAQ. NVIDIA is 8%. And look at these prices, 30 billion, 28 billion, right? So the Qs, the top holdings, Apple, NVIDIA, Microsoft, Amazon, AVGO, Meta, Tesla, Costco, Netflix, and Google. That makes up, what is that? 17, 24, 34, 37, 45% of the Qs are these 10 stocks. You can actually see all the holdings if you wanted in there. But the other thing too is I've got a trade on Sophie, SOFI. That looked pretty good on Thursday. And I've got the TQQQ as well. I don't want to be so heavily in tech, right? I don't want to make that mistake where if I have all my eggs in one basket in one sector, then if something happens technology-wise, I don't want that to wipe out all of my trades. So I've got an XLU trade for utilities. I've got a Sophie and a TQQQ. So those are two tech ones. So I have to be careful if I'm going to pick another stock, maybe not a technology one. And so I saw something else interesting. But let's go ahead and if I do this, that's going to so here's Apple. Now, when we were looking at the swing on Apple, we were looking on this day, on the 13th. And we found this from the pre-market volume. I'll talk about this, and then we'll find another swing trade setup. We'll talk about that. We'll map it out. So here, on the 13th, this was right at the end of the day because I went a few minutes into the close. So this one closed at 244.60. I think, no, 241.53. I was looking up top. This candle, 241. Now, when we talked about it, we're like, okay, we're swinging on the daily chart, right? So where would our targets be? Well, 245 is a major level. And then we were looking at this print at 228, 248. There's a 4 million print. That just goes up here so that all your labels aren't squashed, but this is 248. And then we've got 250 is a big level because it's a $10 level. And then we've got the 254.49. So when we were swinging this, if it was overnight, the ATR is $6. So we were looking at 241.50, 245, something like that into the next day. But when we go from into the next day, we've got to look at the pivots and cams, right? If we're looking at this for a longer term swing, right? Because we have that's got more volume. I guess you can borrow the volume, but anyway, closing above the print there, we're looking from, say, here 236 to 250. We're not terribly concerned what happens on the intraday charts with S1, R1, things like that, because we're trading the higher time frame. So eventually it might get there, and it might take a couple days. So when we were talking about it, it's like, okay, if the ATR is $6 a day, usually what we could do is we could say, well, if we double it or 2.5 times, that's $15 and go out 2 months, right? Or a month or something like that. If we think so, and how I figure out the time, it's like, how many candles do you think it's going to take to get there? And when we're making that consideration, it's like, if I only need to get from here to here, 2 months is too long because that's 40 daily candles to get there. It's like, can this get from here to here in 40 days? Yeah, absolutely. Or 40 trading days? Absolutely it can. maybe we need to go a little closer, right? Maybe we need to do 10 days. Maybe it's just the following week, right? Because it was Thursday. We could have swung it the next day. That's a bit risky just to buy the next day calls. They'd be cheap. But I think that's a bit rolling the dice. Personal preference, really. But we could have went out to the next week. We could have got them for today and bought the with a target of 240, 245, 250, something like that. The other thing too is if it's really going to move, you could buy something further out of the money, and with the volatility, it'll increase quicker. So there is that option. But anyway, this was the perfect swing. And remember, we looked at Intel. It was so far extended, it looked great, but then it pulled back to the 4. And this one's going up. So on the Friday, then we would have taken some money, right? This one came up to 245. And then today, we're sitting around there, and we'll see if we can break above. Now, it's very easy to say, oh, look at this, right? It opened here and went up and then closed close to the high. You get a lot of stress if you're trading. So with our trading plan, what are we doing, right? Because if you're saying I'm going to swing this for a week with a target of 248, and then you start looking at it like this, we'll go back to the 5-minute. Oh my God, it's here. We're at 240. It's not holding 245 and all of this sort of stuff. It's like, we're not trading the 5-minute chart. Our trading plan is for 248, 250, right? If you wanted to take some profit, here's the thing. If we're looking at this and you see this coming up to R1 or R2, well, that could go today. But if we see this coming up to R1, 246, 247, or it's approaching, then of course get out today. We've got alerts. We've got things that are set. If it gaps, we can go ahead and do that. But you don't worry about it. Like my XLU trade, it was a little ticked because as soon as I bought it, it went down. And you can't help but to not feel that. Like if I bought XLU, coming up here, I don't even know what day I bought it on. But anyway, everybody's been there. The day you buy it, it goes down, right? And so it could have been, I don't even remember what day it was, but it looked fairly decent. And anyway, so I've got the March 83, 84 calls. I must have bought it around here. I don't know, or maybe here. But anyway, it tanked and it's slowly been going up. It's slowly getting back up there. But the thing is I've still got another month. In 20 candles, can it get up to 83? Can it get up here in 20 candles? That's not bad, right? I really need it to get above 80, right? So this might not work out for me. I don't have many contracts, and I've got my risk profile. That's there. And so there's my alert for TQQQ. Okay, I've just got to let my dog out. I need about 60 seconds break, and then I'll come back, and then we'll map out some trades together for the pre-market. Okay, 1 second. All right, I'm back, everyone. Oh, this ACHR. Okay, on Thursday, when we were looking for trades, ACHR, we looked for this, right? We were here, we saw this massive volume, and we're like, it's a pin. Put a pin in it, right? We were still above the print. This doesn't meet our trading criteria. Because remember, we were talking pin, 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 pin. This is a rounding bottom, right? It looked good. It didn't meet our criteria, right? And so hindsight is 2020, but Friday was a good swing day. Because what we did is we set our alert to close for it to break above 10, this print here, from December 18th, from back here. So this might be one. I haven't looked at what the spread is or anything like this. This Archer Aviation, I'm not sure really what they do. Designs and operates electric vertical takeoff and landing aircraft for the urban air military. Oh, that's neat. Yeah, I guess. So maybe they got some contracts coming on. And so there might be a trade here. This is up 37 cents today. So this is something that's on our watch list. Let's look at the 5-minute. So here, now the ATR, look at this. You have a $10, $11 stock almost. And it can move 80 cents a day. So it can move about 8 to 10% a day, this stock. So what does that tell us out of the gate? It's volatile. And I don't know what the liquidity is like on this. It could be pretty thin, this stock. I'm going to see. I'm not sure if I can look to see. Just going to see if I can get the liquidity, what's on the bid and the ask for that. This one will be ACHR. Well, actually, it's only a 2-cent spread. 1073 to 1075. There's 100 on the, oh, yeah, this is my interactive brokers. Oh, it's moving. Okay, look at this. Moby is going to have time and sales. So we're working on that. Here's the bid and the ask. This was only at 100. So what's happening now is on the bid, there's more and more volume coming in on the bid, which is great. And these are limit orders, right? So there's 25, 3,500. So what they might be doing, this might be a great instance of refreshing. The ask size is 2,300. And so what we're looking for, oh, now they're gone. See? They're gone. Now it's 200 on the bid and 1,300 on the ask. So what we do is, look, 1074, we got a penny spread. There's more and more coming in on the bid. So it could be that it's trying to find a support level to take off. Maybe they want to take it higher. The ask size here is only 600. If you want to buy it, you've got there's only 600 on the ask. If you want to sell it, there's lots of people interested in selling it to you on the bid. So you sell on the, yeah, you sell on the bid, you buy on the ask. So there's people are sitting there. There's lots of, so if you were coming down, say for example, this said 100,000 on the bid. If you were coming down to that level, say 1074, say we're going 1078, 76, 75, and you're coming in and this is 100,000. Well, people are going to start buying it before this price, right? Because there's a whole bunch of people that this is a cushion. How soft is this cushion? You know, like in Lethal Weapon, when the guy jumps off the top of the building with the jumper and lands on that cushion, right? It's if you see that, you're going to jump in because this guy wants to buy 100,000 at the, and so they're coming in here, and then the stock takes off. So, but the same thing, if you see 100,000 on the ask, it means they're loaded up to sell it to you at that point. You don't see that too often. You can look at the market depth, the order book, but this is a pretty thick stock right now, pre-market on that. So anyway, let's oh, Tio, yeah. Interesting options activity on it last week. Okay, so I probably have that in Moby. We're doing options too. Moby's been tracking options for the last couple months, and I'm trying to get some statistics on it. We're building out some extra features, and then those should be, hopefully they're released this week, where there'll be a trade mapper like what we're talking about, and then you'll be able to customize your own layouts. So that's coming hopefully this week. And then we're doing options. So we'll be able to see, you can put in, it's like, I want options contracts with a value over, say, 50,000 or 100,000 or a million. And then we can, it gives you all the Greeks and all of that sort of stuff. So you get the unusual options activity and everything. Yeah, so that's neat. So here, let's see what actually happens. So we're above these massive prints, right? So if we look for a bullish trade, we can actually add some. So on the 14th, 112,000 there, 1020, 985. Oh, look at all of these being added, right? All of these prints below. So, but for the day trade, because when we looked at it, it's like, okay, when I looked at it, it's like that's a good swing trade. And we gapped up, right? So now what we have to do is we're at 1069. Let's get above 1104, 1106. We can sneak in around here. I wouldn't do it before the dollar, right? We'll probably come back up to test this and then do it again, right? We can look for something like our 3-line strike with increasing volume breaking above this level. And so 1104 will be big. 1106 is a teeny. It's a 16th, 0.06. So I'd be careful of that. But then look, if the ATR is 79 cents, then it could be reasonable for this stock to actually move, this 40 something cents, 50 cents. It's gapped up already a little bit, so it can move beyond its ATR. Remember, that's an average. We just have to be careful. If you're looking at a stock and it's like lunchtime and then we've already moved the ATR, it's like, yeah, that's a little bit of a risk, So, but if we get above 1106, then we can say, so I'm going to write this down in my notebook, and then we'll put it on here. So we'll do ACHR, and then we'll watch, right? Bullish above 1106 and target 1120. And then 1143, right? Because that's this resistance. And then 1150 is huge. I'm not going to put 1150 because, well, maybe we'll put 1150. Just for me trading it, it's like, yeah, well, 1143, it would pull up, and then it'll pull back at 1150 again. But then we've got 12. So we could actually say 1174, 1186, and 12. Now, the thing is you don't actually have to scale out at each of those levels. Like those of you that are watching my videos, like, so when I map them out, it's like at some, like when you're doing your own trading, let's see if there's a good example here. Not on this stock, really. If it's following the trend, right? If it's following the trend and doing its own thing, and it comes up and it has a pullback, and then it goes up again and it has a pullback, and then it makes it higher high. That's a healthy sort of move on the stock, right? If it's going to move violently, then that's volatile, and then you've got to manage your own risk at that point. So when I'm talking about we're bullish above 1106 and 1120, to take, for example, this is 79 cents, to take 16 cents profit on the first touch could be good, right? You might want to take a quarter of a position or half at that point, depending on how much room you've got. But the thing is when it comes back and starts moving up again, you could do a couple things. You could just be happy that you've taken your position and let the rest move. If you get a really decent trade setup again, then you can add to the position if you wanted. And then, but here, what we're doing is just being wary of these levels. If the move is really healthy, like there's some instances, and you must have seen some of these days, they're quite frustrating because it'll ride the 4 and the 8 all day. It doesn't care about the pivots, the cams, nothing. It's almost like the algos are turned off. It's just going up, 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 back to the 4, up, 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 back to the 4 all day. And there isn't really an opportunity to get in because mentally you can't deal with it. We're all designed to try and find a bargain, right? So I just got to let my dogs in 1 second. I just noticed there's shingles in my yard. I'm gonna have to see if they're from my house. We've had 50-mile-an-hour winds for 3 days now. We've had a big storm, and so anyway, it ice rained for 6 hours 2 days ago, and then it's been just 50-mile-an-hour winds. I'm in Canada. So it's minus 26 Celsius with the wind today. I don't even know what that is in Fahrenheit. It's bloody cold. So anyway, now here we've got a plan for retracement. So let me just duplicate this for a second. I'm going to switch this back to the daily. And these are our supports, right? We've got 10 for support. We've got the 4 EMA at 1016, and we've got the 8 EMA at 985. We've got to get below, and these are moving, right? The moving averages, that's the M. So this actually has to break below the 8 EMA to go short. So we have these sorts of ideas. If we're long this stock, and this is a good example of those impulse moves, right? 1, 2, 3, right? And then whatever this happened, 1, 2, 3, 4, 5, or however that sorts of thing works. But these impulse moves, if we get below here, then that comes down. And then if we're looking at this impulse, 1, 2, 3, and so if this is a 3, now I don't draw them out all the time. It's part of my decision-making process. Where in this wave thing are we going? It looks like this is the beginning of a 3. And so usually it's a 3 wave or a 5 wave. And then, although we're really excited about these prints, it is going to pull back at certain times. You see 3 or 4 green candles in a row. Usually there's a pullback, right? 1, 2, 3, 4 pullback. This is a bulldogy sandwich, right? There's that. So if we count them 1, 2, 3, 4, 5, I'm counting that as green because it's still bullish. Then we have a pullback, and you see 3 or 4 red candles. There's maybe time for a retracement. And then look at this, boom, up thrust, 1, 2, 3, 4, 5, 6 red candles, and then now we're moving up. 4 red candles in reverse, 4 red candles, and we're up. Those sorts of things, and it's a psychological thing. You can't handle 3 red candles. You can't handle 4 red candles. Increasing volume, my God, we're out of here, right? So anyway, there's that on the upside. So I wanted to point out, because of the higher time frame, these are more important. And even though we're trading the 5-minute, so let's go ahead and look at the 5-minute. So here we were about 1080, right? So we would have to, we've got this here, that's the 8 o'clock candle, which is just those candles, you get big wicks because of the rules that happen in the market. Trades have to be reported within a certain amount of time. So the 7 a.m. candle, like the 8 a.m. candle, maybe the 9 a.m. candle or something, you might get a lot of volatility. This doesn't really affect the price of the stock too much, because you would just get thousands or hundreds of thousands of trades that are being reported that might affect the well, out of this, didn't really affect the volume much. So depending on the type of the trade, it might not affect the volume. It definitely affected the price action at the time, because we saw all of the trades come in with a high of 1091 and a low of 1051. So 40 cents here in this, there were actually trades that were logged. Whether or not they filled the order book is something else, right? But this came up to the top here. So we've already discussed the higher point. And so if we're coming down here, this kind of is our range that we're stuck in between, is one of these candles. And so we need increasing volume breaking down. And then what's our stop loss, right? If we're going to come down, we're going to go short here, 1063. So it'd be like 1059 or something. We'd have to break below here. 1059. What's our stop? Are we going to give it 20 cents above this? Right? Because this is 1069 or 1062, or where's our stop? Because then now 1053, well, that's 7 cents, right? So is it worth it to go short? And at what point can you get a decent return? So maybe this is 12 cents here. So if you were going to risk it here, you would have to say, well, it has to at least the 1053, which is the 50-cent level, and that one's really strong. And then you've got 1044. I don't know if it's worth it. Like if I was looking at this, say, where would I actually go short? Maybe it's even here, 1040, 1039, that's 14 cents to here. And this is back to the, well, that's, what's this, 4 a.m. That was crazy. That came all the way back here. So on the short side, not really that great, right? We'd have to pick something. We could say we're not trading it on the short side, or is it worth it to risk 7 or 8 cents to make 12 or 14 or something like that? And so we just have to be ready on both sides. If we decide that we're not going to trade it, then we'll just say we're not trading it on the short side. If it doesn't tag us in, then we don't take the trade. Right? So here would be 14 cents we could get. So at 44, we would have to give it to 54 at least to come back above this for a stop out. So we're risking 10 cents to make 39 to 26. We're risking 10 cents to make 13, right? Because here's support and then there's a print. So where do we actually go here? It's like, well, we'd have to get below the print, below 10. So this can move 79 cents in a day. We're at 1069. So we could say bearish below 10, but then we've got a print here, 986, 981. So that's another 15 cents. But at 10, what's my stop? Would be 1012. We'd have to give it 12 cents maybe here to make 14. That's still not a great deal. So maybe not. That's a personal judgment call on that. Now, when we're looking at this, right, and we're like, oh, well, should I risk, 7 cents or 10 cents to make 14? It's like, how about we just find another stock? What about that? Right? Because this worked out well for the swing. And so we'll see where it closes. Like what we could do is, if this was good, we could get in for the day trade. And so there's a difference. There's day trading and then there's scalping. If you're going to be in and out in 30 minutes or an hour, that's a scalp, right? And so mentally it's different. A day trade, I'm in it for the day. And so you've got to be able to mentally handle all the ups and downs for the day, right? So let's see if we have an example. Okay. If you got in, I don't even know at the time, this is still just what, a 5-minute? Yeah, we're on a 5-minute. Oh no, and this is, let me, I've got to get this part fixed. My chart keeps moving on me. I just wanted to show this example. It's not doing it to me yet. Oh no. Oh, every time the price is updating, it's moving. Okay, let me do this. I'll just pick another stock for now for what we're doing. We'll look at Intel on the 5. We'll look at this on the 5-minute. And we will blow this up. And if this does it to me, I'll just pick another stock. Okay, I'm getting up trading view. I've got to get that fixed where it's the position isn't working well. Let's go to the 5 minute here. And I like this. We'll just pick something else. What do we Bitcoin? I'll just get rid of all my drawings. And then we'll hide the indicators. Okay, so if we're getting, let's see if we're going long. Trying to think of the best. Okay, here's one. I'll switch this to algorithmic. Okay, here's a perfect example, right? If and we're looking at this here. So if we're in a day trade, right? So if we were scalping this, it doesn't matter that it's Bitcoin or that it's $90,000, right? If we see this reversal pattern and we get here, right? And so usually you would wait to the end for the candle to close, sake of argument. And we have this as a support. So say this looks like it's a good trade setup and we're in it, but it's a day trade. If it's a scalp, where are you going to scalp? Where the biggest rejection point, or we do some work. But if we're going to be in this for the day, when this actually happens and it pulls back, when this candle forms, you can't be like, oh no, because your stop has to be below here, right? We're not trading with prints on Bitcoin unless it's IBIT or something, but we'd have to make a lower low on here. So we don't know about this pattern, right? This is the other thing too, because we're looking for things like a 1, 2, 3, 4, 5. Well, this is a 1. You don't know, you never know how far the 1 is going to go. You can only estimate it by looking left. So if we're going to get in here, we don't know where the expected turnaround is, right? So anyway, the point is, we get up here, we see this red candle. We're not flipping out. You know, it's a day trade. We're at the start of making one of our routine patterns, a 3-wave or a 5-wave. And so this comes up to 96,200, right? It's a day trade. Are we taking some profit or not, right? Because this is where I would get confused with stuff. I would have a swing with a month left on my options, and I'm worried about what's happening on the 5-minute chart. Our trading plan says we're in it for the day, and we have a long-term target of, say, the moon, right? But whatever, we've seen all of this, so it doesn't matter. Say our target is right here, is 96.5, right? We've picked a target, we've measured it, we've done our homework, 96.5. When this, and we get in here, for example, then our stop is down here. And we see this and we pull back, we start pulling back. And remember, psychologically, I can't deal with 4 candles, right? I'm getting out, covering, boom, psychologically, and it held 96,000. It only moved $200 in 25 minutes. And we're not flipping out either because our stop is down here. This is brilliant for us. This hammer is good for us because in the whole structure, 1, 2, we found support at a major dollar level. I don't know if there's increasing volume. I turned it off. And then we get this. And then we make a higher high. And then we pull back. And is that a higher high? No. Now, we could add to our position here, closing with a higher high, right? And you do run the risk of it pulling back. And if we added to our position here, it would come back, threaten our stop, wherever our stop would have been, but then it moved higher. And if we have our moving averages on there, let me put those back, because I rely heavily on the I rely heavily on the moving averages. So I've got a whole bunch of things here. If we're going to come back, oh, and plus these bars here, these crosses, that's the daily open for the day. And I find that's really helpful. If it's green, we're above the open. If it's red, we're below the open. So when we start seeing those sorts of things, and then you have strength and you have volume, then we can add to the positions as we see fit. Now, we're always looking left. So let me get rid of these. Let me get rid of those. If we're coming up here, right, there's a decision to be made. 96.3, looking left, what do we see? Look at all this. 1, 2, 3, 4, 5, 6. All of this is resistance. All of this is resistance. Do you add to your position? These are questions we have to ask. Now, and it might be weird for some of you having that discussion about adding to your position, because I think we mentioned it briefly. I read a book, it's called The Best Loser Wins by Tom Hugard, right? And the daily bar, the indicator for the daily bar. Oh, let me turn this back on. So I think these, oh, do you mean these ones that are different colors, Leslie? I think that's what you're talking about. Is so what I've got is I have this indicator, volume-based colored bars, it's called. And what this actually does, it helps me because I'm always looking down for volume as well. And so this takes a 21 period, the last 21 candles, and then it averages out the volume for the last 21 candles. You can adjust this to whatever you like. And then you can have different colors for different things. So when I read this, the higher volume candles are these darker. So that, like, for the bullish ones, this color 3 is a really dark green, right? Because there's more volume. And these blue ones are pretty much that there's little to no volume. So when we're looking at these, so you can see this, see how this is a really dark burgundy one? That's because the volume is really high on it. And then we've got this upthrust one, which is lower volume, but this really dark green one is higher volume. And then we have this this one here, but this is based on they can change based on the previous candles. So X number of candles, whatever you set their volume. Yeah, so that one's called volume-based color bars. I like that one. And I use this other one, open daily line, because I need to see where that is. When we're looking, so with the open daily line, we look at Intel. And where's the open? This green thing here. Remember, these 85 candles or whatever on the 5-minute make up the daily candle. So if we look at, I'll just zoom out for a second. I'm looking for a good example. This one, I'll tell you what I'm looking for is this one. Usually what will happen, I'll see if I can find a better example of it. It's down. Looking for a bullish candle and okay, something like this. Okay, this just turns out to be something that I like. I always look for these patterns. But you see this candle here, at the open, it would have just been sitting here, no candle at all, right? Because your day is just beginning. But this is our current open line, right? But this one, if we look at it, this one actually came down and wicked and tested the previous day's close and then broke the open again. That's phenomenal, right? My friend Donda, I don't know if you've met her, but she would always sing a song, "Wait for the wick," da, 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 right? Because when it opens, what she's looking for is it for to open, come back, test a print, a pivot, the previous close, anything, and then break above with increasing volume. Game on, right? That's what she would teach in that case. Right. So this one here, even though it was lower volume, this opened, came about 30% into the candle. Now, this here, these moving averages are a mess because the chart has continued on, right? So I'm not sure what these would have looked like at the time. We'd have to do a replay. But this could have come up, down, tested the 4 and the 8 or something on the daily, and then moved up. And then with the color of the candle, see how it's light blue, there's no volume. These are lower volume, increasing volume there. And then so I always look at the daily, right? Because you can see where it has to move. So if we look back here, like we did earlier, this is a double top, right? And we can draw this liquidity zone right here. Right there. Tops of these candles, the wicks, all of that. This is a liquidity zone. This is a trap, right? Really, you want to get above that. But what we did is it stuck its neck out and then it was rejected here, right? So anyway, we'll see what happens because this is the larger time frame. You won't see this on the 5 minute because you're not going to go back to December to see it. Right, you can scroll out on the 5 minute, no problem, right? You can look at this. And all of these candles make up a day. You can still see, look at this, rounding bottom, boom, 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 on the 5 minute, all the way up. That's as far back as I can go on Intel. And if you're looking at this too, just different ways to look. So we're trying to be completely unbiased because what we can do is we can say, oh, I'm really bullish on Intel, and that's all you see. And we don't want to do that. But this has come up. And if we could go back far enough, we could see that this might be a cup and handle forming. And did we break the overall trend, right? Even if we're looking at the 5 minute. We'll connect that one and this one. We'll connect it this way. I'm trying to get as many I don't want to break any candles. You don't want to harm, no candles were harmed in the drawing of the chart. But there's support. I could turn off the session, the post market, but that would just kind of squish this in a little bit. Let's pull this back here. Let's see what that gives us, if that's good or bad or whatever. This here, we're cutting off this post market. That's exactly what we're doing. So we've got this, we're touching that at the open, and then here. So here's our trend. And then that was the low here, which actually turned out to be an S4, right? That was the low, and then we took off. So when we do some research, so we talked a lot about being able to trade the same stock, right? So we were interested in like Intel, TQQQ, Apple, things like that. If there's some that you like to trade, right? Like so Intel with however many millions of shares, there are trades on it every day if you like it. I don't think the options are okay, but I think it might be better to just trade the stock. And then if you're only trading options, then look for something, trade something that has prints and great options. Like I've been trading the TQQQ recently. It's had decent option spreads on it. I've noticed that the SPY and the Qs have started to get a little bit thin. Everybody's going to the futures or SPX 0-day, or they're trading that because those have become super liquid. But I haven't taken the time to learn futures or anything like that. I understand the concept. It's pretty much the same as trading stocks, only it's a different exchange. There's some nuances with it a little bit. But if you can read a chart, you can trade it, right? Just the execution and a few other things might be a little bit different. But notice here, since we did this on the daily, you can see what's happened. We're halfway through that range, and we're banging our heads there. And because we're trading intraday now, we've got these pivots. So we've got this one, and really to go long on a swing, we got to close above 25.50. So now, if we're looking at it, okay, Intel long, bullish above 25.50, and then we map out a trade, right? We've got to get up here, 26.37. That's without looking at prints. That's a new, we go up here, that's a new recent high. And then I've got some old trades up here. Look at this with this gap down, right? This can get up to 30. There's 3 million and all of this. So all of this happened, and then boom. I remember this time they had terrible earnings, and then something happened. Oh yeah, they had terrible earnings, and then Apple or something backed off using their chips. They were going to switch to, I think Apple had bought their own chip manufacturer, and they were doing something else. And then AMD was doing something that was better than the Intel chip at the time. So there was like 2 or 3 really bad news things all at once. And we went from $30 to $19 on earnings. And so that's kind of bad. So this is just a sideways 19 to 24, right? Here's a little head and shoulders. That's there. That's a megaphone. So that could be bullish. So we're really trading kind of, we're just looking, yeah, we're looking left. We get above that, up to here, up to 30, if it's really going to run, but we have lots of prints. So let's see if we can find something else to trade here. I will go back to our dashboard. February 18th. We don't need that one. Oh, I'll just pick this one. This one can be our dashboard, and I'll move it over here. Our pre-market volume. So we've got 78 right now that are over 400,000. If I put this to 50,000, we have 340, right? So when I start this, I start at about 5:30 a.m. is when I start. 20 after 5, I start looking for stocks to trade, and I set it at 10,000. And there might be 50 or 60 over 10,000. And doing it that early, it's okay to set the number lower because you are so early that by the time you look again, they're going to have a lot more volume with them. So this is a prescription thing. This RXRX, I usually don't trade pharmaceuticals, and so I just leave that one alone, and it could be pretty volatile. But look at what's on the list. TSLL is Tesla Bulls. So I don't know if you noticed, but some of these stocks now have other stocks that leverage the underlying stock. So like you have MicroStrategy. Well, there's a MicroStrategy long, a MicroStrategy short. Any chance to make this sort of money. Intel's on fire. We've mapped that out. Nvidia's up $2. So look at this. Chips. This is AI. So chips and AI. Tesla's usually in there. RGTI is computing. IBIT is Bitcoin. Oh, actually, IBIT is down a little bit, but they've had millions and millions of prints. Let's look at IBIT, because if anybody's looking at crypto. So on the 12th, so that's Wednesday, 5383 was another 1.8 million. If I'm going to put this up to, say, 500,000, get rid of some of the noise, 5855. So this overall, are we bullish or are we bearish, right? It's the overall trend. Bullish, right? 1, 2, 3, 4. We might be cutting it off a little bit. Okay. This might be switching bearish. And so looking at this, so we zoomed out. We have no bias on Bitcoin. I like cryptos. I've got, most of my retirement things that I have is in crypto. I bought Bitcoin at 52,000 and sold it at 98. So I was happy. It was only $500 though, but I was happy that I made that. But I put most of my money into the XRP, XLM, the ISO 2022 coins, those ones, and then I've got a couple meme coins. So I watched the crypto market, not terribly closely, because my trading strategy is long term, especially with XRP. By March 10th, all of the banks, pretty much all of them in the world, have to be that ISO 2022 compliant and be able to take transactions in the XRP and the stable coin. So the SWIFT system and everything's going down. And SWIFT is actually switching over to XRP as well. So I'm long-term bullish on that, because when that switches over and replaces the way that the banks interchange money with each other, then it has to absorb several $1 trillion very quickly. So for a $3 coin, pretty excited. Without that information, then yeah, $3, $4, $5 maybe. But I plan to hold it for years. If it gets fairly expensive, I mean, I've got a few bills I'd like to pay. So but otherwise, I'm not really looking at it every day. Bitcoin tends to follow the SPY most of the time. They correlate fairly well to each other. But anyway, if you're trading cryptos, these are helpful. Following the ETFs, right? This is how the big corporations, the big banks, get retail investors to give them money so that they can manipulate the crypto market. I mean, there's money to be made in it, so of course they're interested. But if somebody has, 10 million shares on the SPY, the general market goes down if it's a sell, right? So here we can see 1.8 million, 2.5, 6 million, 54.78. We're right on that print, right in the middle of here. So for what, if we're going to watch Bitcoin, we got to be bearish below here. 54, what's that, 53.94? We got to get below 53.50 maybe for a trade back down to this bottom. We got to be careful. Maybe here, 51.50. And then if we compare this to Bitcoin, because you'd have to say, it's like, okay, well, if IBIT moves $1, what happens to Bitcoin, right? And so this here is a double top. And there's the thing, what do you call a failed inverse head and shoulders? A double top, because it didn't do it, right? You can see this, there's a shoulder, kind of a head, maybe it isn't. It's maybe I'm on drugs or something, but it kind of looks like it, but usually that's the saying. A failed inverse head and shoulders is a double top. And then if we draw this here, this was the similar sort of thing. This is all liquidity up here. And then we've got these prints. So now we know where the institutions are sitting. And so if we were to go mega long on Bitcoin, we've got to get above 61, 62. We're at 54. So this has to go up 25%. right? To be massively, massively long on Bitcoin. But Bitcoin has to break 112. And remember, we talk about eights, and so if you have something that's 100,000, well, 112,000 is 1/8. It's 1/8 of 100,000. So those big levels, they work out the same way too. So a teeny would be 106, 106,000, an eighth, like we talked about, 5/8, 1,062. Those sorts of things. So this, when we look at it, it's a bit of a mess. But if we zoom out here, let's have a look. This broke the structure, and so we're just sideways. So what do we have here? If this is a downward trend, 1, 2, 3. Is this even anything? 4, 5? Who knows? It's messy. It's messy. So there isn't really a trade here because we're stuck in between prints. And when you look at it, so it's 54 to 56, I could miss $2. It's like, no, it's not worth the noise. This is all noise at the moment. And it's not the straight up trend, right? When we look at this, we can draw this line pretty much to there. If we start doing those 3-line strikes and stuff like that, increasing volume, breaking above the print, it held this one. It held this one here from before. So let's see. Today it's coming back. If we break below this, yeah, then we've got to trade maybe to the downside and then to the up. I've called this out a couple times, but it's got an ATR of $2. And sometimes there's been a great trade setup, especially when there's it's coming up and it's testing prints. But clearly they weren't done, right? Because we come up and we test this all the way back down to these ones. Now we're stuck in all of these prints here. Then we've got to go. So let's see what else we can trade here. WRD is We Ride. What's this? They're up $8. This might be a little difficult to trade. Oh, yeah, this one's going to be brutal because what's the average volume here? 24. Yeah, look at the volume. 68,000, 52,000, 100,000. And then you see 105,000. Then yesterday, 21 million. And then today, 2.3 million. It's like 100 times the average volume pre-market. I don't even know what these guys do, so we'll hover over here. It's an investment holding company, autonomous driving products and services for mobility, logistics, and sanitation industries. In China. So We Ride, they actually make driverless vehicles for the Chinese market. So China's taking off, like some of the BABA and the Chinese stocks. This might be worth it to watch. So if we were making a long-term portfolio, what sort of things would we be interested in? Right? We would have AI, we'd have some chip manufacturers. I guess I'm a 70s kid. There's no way I'm letting a car drive for me. I don't think I'll be able to do that. And so anyway, sanitation trucks, this and that. If this turns out to be a half decent investment, then that might be all right. And people wind up thinking, if we're looking at this, this has to find some sort of a ground. Like this is not a safe investment for trading. But people are always looking for a discount. They're like, oh, it could be, I'm waiting for it to be cheaper. It's like, if you look at it, now, finance is one of the things where that's a terrible way to look at something. If something is cheap, the company might be distressed. They could be on the verge of bankruptcy, right? You can always buy something high and sell it higher. And what we're looking at is we're looking at the dark pool. We're looking at several things that meet our confluences. Like when, for example, when NVIDIA was at 500, there were people like, oh, it's going to pull back to 400 or 300. It's at the end of its run and stuff. It's like, well, let's just follow the prints. And we were discussing different ways to get in. If you have that 3-line strike, higher high, increasing volume above the prints, the 4 and the 8. It's like, I don't care what the news is. I stopped reading the news. I stopped reading reports and all of that stuff, because when you see somebody put $1 billion in a stock, that guy's read something. I just want to be on his team, because at the end of the day, all you want to do is make money, right? You want to, for whatever reason in life. But if somebody else is going to put $1 billion into a trade and I see it on the chart, it's like, thanks for the tip. I'll follow this along, right? I don't want to sit there and have to read reports and make decisions when somebody else is paying somebody else to do it. And you can tell what their sentiment is by the trade. So this one's interesting. I'm going to write this one down. And it's, what was the WRD? And that's We Ride. And then, so we'll just watch it. This seems to, it might not be great. It might be awesome, but now all of a sudden there's interest. I don't see any institutional interest yet. No, there hasn't been any prints on it. So let's go back here. That's an AI one. And then let's just refresh here for a second. We'll see what's new. Is there anything that you guys wanted to look at? We'll pick one more maybe, and then we'll call it for a bit until the afternoon meeting. Oh, here's what I was telling you, the 2 times long MicroStrategy, right? Because they just borrow billions of dollars to buy Bitcoin. And so anyway, this is a 2x long for them. IONQ. Here's China. Okay, Tio. Yeah, so I can talk for a while. So that's the thing, is we'll call it there then. China, so we just saw that China stock, FXI, is moving. Here's another 6.9 million print from October. And let's see where that goes, right? Okay, I'll give you back the rest of your day. The market's opening in 35 minutes. I'll have Matthew share this. And then what time's good for you this afternoon? Do you want to do like noon Eastern? Sure. Okay, so Leslie, I just saw your question. Yours is like open daily line. Mine, I go to indicators. Search, technicals, open. This guy has 812. So I'll put him on there. Oh, I'll mark it as a favorite. This repo 32. Yeah, so just look at this one and see if that does it for you. And then Teo's saying ACHR is testing 11. Oh yeah, so we were bullish above 1106, right? 1095. So TradingView, I'm working on a script that actually does all the pivots and stuff pre-market as well. Because this TradingView, if you use the ones there, it only does, these don't come live until the market opens, which isn't really that helpful. So we'd have to look back at Moby for that. Okay, I'll let you guys go, and then I'll be back at noon Eastern, and then we'll see, and then that'll be kind of our afternoon meeting, and we'll call it there. Okay. All right. Thanks, everyone. And then if there's anything you want to discuss, because my whole thing is, I'm not sure if you guys wanted to learn something specifically, but I'm just talking through strategies and things like that. And when we're looking at stocks, if there's something that I'm thinking of that maybe might benefit the group, we just kind of talk about it in sort of a roundabout roundabout way. So if that's a good format for you guys, then we'll continue. If there's something that you want specifically, then we'll talk about that. Okay, so see you guys at noon.